Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Going into the next slide, this just shows you a little bit greater detail of these measured moves. And what you will see is that when a breakout is more gradual, such as B here compared to A, you might not get that exact equal move as compared to A if the pace or the momentum is the same as compared to A. So in a previous example, we saw where the momentum or the pace did begin about the same right here, but because it paused and formed this correction here, basically right above the 2, which it didn't have in this previous drop, that shifted that momentum and made it more difficult for this to establish an exact equal move on the downside, which would have hit closer to about here. So that will affect the outcome of a move and basically affect the timing of the next reversal. If it's stronger than that previous move, though, then you can get more than an equal move on the follow-through. Here's just another example that shows you that I pulled from a previous class to show you how these really do hold true over time. And again, this is an example of the EUI. And these colors are not showing up on here at all. But you have that drop there, a sharp drop. Let me try the pencil. Okay, there we go. So you've got this sharp drop, this correction here, and then the continuation when this channel breaks. And you can see the shift in momentum of the upside. Here's the stronger upside, kind of slows a little bit here, and basically I'm just transecting this upside move, meaning I'm cutting it in half, trying to go through as many bars as possible and ignoring any of the tails. Tails are not important when you're looking at the overall momentum of a channel. Oftentimes, you might have like a large tail at the very end of a channel, whereas the rest of the channel is in a very consistent type of mode. So you want to pay attention to what the majority of that channel is doing. And so here you can see this shift in momentum, very similar to some of the previous slides that we looked at, leads to this breakdown. And the breakdown, the momentum on that breakdown is very similar to the momentum of this initial drop. It's not faster, it's not slower. So hence, that serves as a really strong target level and a good area for you to look to take profits on this particular position. A lot of traders, they'll see these breakdown strategies and they'll think, oh, well, previous low, that's going to be my target zone. And they'll place it here, and maybe it pauses there for a bar or two, and only to break right through that level. And they end up kicking themselves at how much they left on the table. And that's because these continuation moves, as long as the momentum is similar to a previous drop, it has a higher chance of going for that equal move zone and breaking through the previous low than it does actually stalling and holding that previous low zone. Here's another example, and it shows you, this is an example from the BPX, which is the U.S. dollar British pound. And what you can see is that even with gaps, that same equal move ideology or theory is going to hold true. So even if you get a gap lower, if the previous gap was similar, you're still going to see that equal move zone hold before you get a larger reaction or support off of that zone. This is also a good example of how a gap closure can serve as a support level. So you have it basically gapping down, filling this gap zone, and it's an equal move price level. So you have a number of reasons right here that this would serve as a target zone if you had taken this bounce here as a short. And here's just another example, but in this case, the momentum was stronger. So we had a sharp increase in momentum here going into this 67 level, where it basically broke out of that channel that had comparable momentum compared to a previous rally. So it's circled here what the original target zone would have been, but because it gained momentum, it was able to push through that exact equal move target level. Now the third thing that I want to show you are these trend moves, basically trend development. And a trend, very simply, is just the primary direction of price action at any given time. So we've been looking at trend moves throughout this entire presentation. But understanding where the price is currently within a larger trend is very important in determining which direction that price is going to continue to move or reverse to. You might have a strategy, for example, that looks like a bull flag. And a bull flag is just basically you've got an uptrend, which is a series of higher highs and higher lows, and you've got a gradual pullback within that uptrend. Well, if the larger trend is extended, you might not get any decent follow-through at all as it attempts to form another continuation move. In fact, it might hit that level and go right through it. It might bounce off of it just a little bit and then go right through it. Or if it does bounce, it might go to a really slightly higher high or a retest of that high only to reverse. In any case, you might not get that same follow-through depending upon where this bull flag is taking place within that larger uptrend. So here's a core concept of trend development, and for any of you that have any familiarity whatsoever with trend analysis, you've probably seen something that is a variation of this. Elliott wave theory is perhaps one of the most popular variations of that, and this is a template based upon that same idea, where basically what you're expecting are 3 major trend moves, and then you often have 2 corrective moves in between. And what tends to happen is that after that third move takes place on the upside, you're going to have a larger correction that will break that uptrend. One key thing to keep in mind here that they don't teach you, however, is that how this correction forms between each of these waves in the upside is really instrumental in determining whether or not you really do have that solid reversal off of that third high. And also, the momentum of these moves is going to determine how you react and how you correct. You might have a correction that, yes, it breaks that channel, but then it goes ahead and continues higher anyway. And that's often the case if the momentum has not shifted within this correction, and so you have a gradual correction, or you have a rapid correction to begin with, hugs the level, and then forms a more gradual pullback or break through that lower channel. Whereas a stronger reversal might form if you have where the momentum is changed into, let's say this is a third high here, and it's slower than the previous 2 upside moves. Then you can get those really rapid breakdowns and reversals where it might not even pause at all at that lower trend level and just go right through it. So momentum has a very, very big role in determining how these trends will reverse or correct, and whether or not you really have solid follow-through, or you have something that forms a trap, such as, an attempt at a fourth high, goes to slightly higher high, only to reverse sharply off that, or whether it reverses immediately and follows through.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.